Hey y'all, what's good? It's AM Trades, and today we have a trade recap as well as day 9 of our Zero to Hero series on our journey from 0 to 1 million in funded as a 15-year-old day trader. So today we ended up taking 3 trades with 2 trade ideas. We ended up catching a re-entry, which was quite nice, as well as kind of working our way through the market today. Today was quite a risk on day with the amount of trades that we took, but we managed our risk very well, and I will get into how we manage our risk in our reentries and how I limit myself to 1% risk while maximizing my potential profit, right? So yeah, with that being said, we can definitely get into kind of today's trade idea. So we had unemployment claims this week. Like I mentioned before, this is the worst week in May to be trading in terms of economic news and volatility. And this morning was actually not bad because we had unemployment claims. It is a Thursday. It is not a Friday or a Monday, which means that we have optimal trading conditions, as well as red folder news in pre-market, which means that we are free to trade the 950 to 1010 macro as we would like to, right? Which always creates our highest probability setups. So yeah, unemployment claims came in bearish for the DXY, meaning bullish for the indices. And it was quite bullish actually, because if you look at the previous and the forecast, we were way off in terms of what we expected to see from unemployment claims this month. But with that being said, there was also 30-year bond auctions here on the US dollar at 1 p.m. EST, which usually do not have that big of an effect on the market. And then tomorrow we have consumer sentiment at 10 a.m., which means that we will not be placing any trades before 10 a.m. EST. So yeah, with that being said, we can get into the chart with our 3 trades. Like I've mentioned in the past, we always try and look for confluences with SMT as well as our OTE, which is a 0.62 level on our Fibonacci retracement tool, right? So the first trade we took actually was before that. I actually did break my rules today. Was before our 9:50 a.m. macro. So if we go here on the 5-minute and right before market open, okay, we ended up trying to take longs, okay, targeting previous day's high and this built up liquidity. So that's previous day's high and then this high, and then we also had relative equal highs from all-time highs up there as well. Well, not all-time highs, but previous day highs, right? So we were trying to target all of that up there, right, for a nice, what was that? Let's see, about a 1,100 tick move, which is quite large, which would mean that would probably be the full daily distribution. But yeah, so that's what we were trying to target, and our confluences were here. You can see we have bullish market structure here, filling for value gaps, respecting it nicely. We also have this higher time frame fair value gap fill alongside if you go on the S&P here, a SMT of these. Let's see here, where was it? Yeah, so higher time frame, and then an SMT of these lows here, where we had them swept on nasdaq and they were not swept on the S&P 500. So that implied higher time frame bullish SMT, meaning we wanted longs, and so we were just looking for a continuation play to the upside, right? And then what ended up happening is I set limits here pre-market for a turtle soup, okay? So that is internal liquidity swept into a fair value gap and looking for a swift reaction to the upside or to the downside, depending on where you set your limits, right? Or what the market structure is like. So I had limits here, and they ended up getting tagged in at about, let's see what time that was, 9:33, so 3 minutes after market open, right? And we also had OTE of this range right here as well. So if we draw our fib tool from the bottom to the high, and this is also our SMT high, which makes it even higher confluence. Oh no, sorry, it wasn't that one. It was our entire range here. So if we take our fib tool and drag that, we also had the fib retracement in our favor, right? Meaning that we wanted to see longs, okay? We wanted to see longs right here. There it is. Yeah. So the fib was right in the middle of our drawdown, which is fine because we wanted to see a swift tap into this area of liquidity and then take that for value gap and then move upward. And we ended up not seeing that. It came down, swept liquidity, reacted a little bit, came down into our OTE level, and then swiftly traded through OTE, stopping us out here for -1R on the day, which is fine. You know, it's whatever. I should have waited for the 950 macro because, as you can see, exactly at 950, we put in our low for the AM session, man. Like, it literally doesn't get easier than this. The last 10 minutes and first 10 minutes of every single hour, the 9:50 to 10:10, the lunch hour macro, which is 11:50 to 12:10, as well as the PM session macro, 1:50 to 2:10. Those are the key times for you to be executing trades, man. Because we will routinely put in lows of day or lows of session or lows of the 4 hour, 1 hour candles on these specific times. Because when 10 a.m. opens in New York, every single candle from the 4 hour downward opens at the same time. So your 4 hour, 1 hour, 15-minute, 5-minute, 3-minute, 1-minute, 2-minute, 30-minute candle, they all open at that time, which means that there is going to be manipulation. Always. Always, always, always. So you can see here, 10 a.m. manipulation, we came all the way down, swept out all of the early buyers here. I was one of the early buyers up there, as you can see. And so we got swept out, and we also reacted into this older 1 minute for value gap, okay? And then swiftly, we saw a good entry for this, which I didn't end up taking, would have been the first inverse for value gap. So we can see that we did not have any here all the way up until this candle here, which would have made it quite a bad entry because there was so much price action. It kind of left us behind with no entry. And that's kind of a large stop loss. Yeah, 350 pips. That's more than what I'm willing to take. So I probably wouldn't have taken that regardless. Oh no, I actually did have limits placed here. As we can see, we had a 1 minute for value gap, large displacement through right after our 950 macro, right? So we are looking to execute in this time. This is right after coming off a loss. And then I was waiting to see a tap back into here. I had limits set right into this fair value gap, but it ended up forming a breakaway gap with this 1 minute order block as well, coming into this inversion fair value gap. And then we saw a move to the upside. Very nice, right? So I got left out on those. That's a setup I tried to take. And then what we did is we came back up into OTE of, and I will remind you guys, I keep my bias very fluid because I know that 1 minute structure and trading on the 1 minute, as well as having drawn liquidity based trading, you need to be fluid in your bias while keeping in mind the higher time frame. Okay, so if I'm trading against the higher time frame structure, I'm not going to be targeting a 1 to 10, right? Like if I'm taking shorts here, I'm targeting the internal range liquidity or the kind of built up 5 minute liquidity. I'm not going for previous days low if we just put in 3 bullish days, right? You just have to keep that in mind and stay rational in your thinking. Don't get caught up in the 1 minute. And yeah, don't get caught up in the 1 minute is the most important thing, okay? Always make sure that you're checking the 5 minute, 15 minute, hourly, even daily, even weekly structure, you know? Just to get that higher time frame perspective. So the second trade idea, we saw a tap into OTE, nice reaction off of it, of this full range. And we also had hourly S&T between this high and this high got swept on NASDAQ. And then it did not get swept on ES. As you can see, this high did not get swept, as well as all of these relative equal highs. And I was targeting this equal low, right, for sells. So we had our stops above here, entered off of a 1 minute inversion fair value gap. Look, we had a bullish fair value gap here, entered off of the inversion, targeting this low first, and then this low here, which was the equivalent low on the S&P 500 here, right here. Yeah, right here. And that never ended up getting hit. We came very, very, very close to our first take profit, and then we retraced and hit stop loss. So that was another, I think that was only 0.75% risk because the stop loss was tighter. So I couldn't risk full on the funded X accounts because it is 1 to 10 leverage on indices, which is absolutely criminal. I don't know why they do that. Well, I know why they do that, to kind of make it more difficult to pass, which is good in terms of me because that means they're more likely to pay out when I do pass the accounts. However, that's a story for another time. And we got stopped out here for negative 0.75% risk. That is a loss I'm very willing to take. This was textbook sells, okay? Any other day, I'm willing to take these, and I will continue to do so in the future because more often than not, they will play out for me. They did not today, which means that this is kind of just probabilities, you know? You got to be ready for it. So, moving on, we saw chop, right around just a bullish move. The longs were the right thing to take here. We had textbook longs and shorts all in the same session, which is not likely and not usual, especially for a day where we only had unemployment claims, but that's just what it was like today. And then I was at school doing a chemistry lab during this time, so I was not on the chart. And then we can see that we had here a bullish for value gap, and then we saw market structure shift to the downside. I wanted to see this green line is previous day high, and this is also a TR pocket, which got hit very nicely on that range. But I want to see previous day's high get taken before I see shorts to the downside, right? And then we just created this engineered liquidity high in line with this high. And so I was looking now to long. I was looking to long to these equal highs, right? Because that's where a lot of liquidity is going to be. And we can see here that we had moved down, and then this is where I got in, okay? So if we look here on the higher time frame, on the 5 minute, where are we here? Okay. On the 5 minute, you can see that we had this big impulsive move up, and then we saw a move back down. If we look at our Fibonacci tool, okay, this is almost exactly, yeah, this is exactly OTE of this range between this low here and this high, as well as being equilibrium of the AM session low and AM session high. So we tapped into equilibrium. We had a 15-minute fair value gap. Where are we? Yeah, 15-minute fair value gap. We tap into this order block, okay? 15-minute fair value gap, 15-minute order block, 5-minute fair value gap, OTE on the 5 minute, OTE on the 15-minute, session high and low range, optimal trade entry. So this was a very high probability trade, okay? And then I ended up taking the turtle soup of, wait, no, where was it? No, it wasn't turtle soup. I just entered off of this fair value gap. So I saw this reaction from equilibrium as well as this 1 minute order block, and then I entered here, okay? And then we were just chopping around a little bit. This was a large stop loss. I placed it below this 5-minute order block, okay? And then because I didn't want to see price go lower than this, if we did retrace, and then we can see that we had a nice reaction to the upside. I was not taking profits until the previous day's high because we had these relative equal highs alongside this high, which is previous day high, and we kept rejecting it all of AM session. So that means that PM session, I wanted to see it get booked, okay? So I was very bullish. And then we ended up moving up, taking out, disrespecting all of our bearish PD arrays to the side. And then we ended up seeing a retrace back into, back down into this 5-minute fair value gap. So I re-entered with stops below here. And when I re-enter, I will place my stops at the same place. So when I entered this second, I moved my stops to here, right? And then we saw a nice reaction off of that to the upside. And we just kind of chopped around a little bit for a few minutes. Ended up inversing this 5-minute fair value gap. And then we were just then we started really chopping for the rest of the session. As you can see here, this was about 3 hours of just chop. So we came back up, created equal highs, and so market closed around here, right? 7 p.m. Oh no, not 7 p.m. What am I saying? So market closed here. I held my trade into after hours because I genuinely did not, there's no way this doesn't book, right? If price is rejecting it that hard, it is going to be taken either in Asian session or London session. And there's no way that we see how many points is that? A 400-point sell-off in Asian session on a Thursday with nothing but consumer sentiment on the next day. Okay, that's ridiculous. So I was willing to hold that trade into after hours. And then I was at the gym, and then I see a notification on my phone. Look at this wick, man. This is a 1-minute wick. Order filled on my trade locker accounts, which means that my take profit got hit. And that is how precise we were. I knew previous day's high was going to get hit, and it did. Look at that wick. Got filled on all my accounts. So that was a nice profit of the first one we made 2.2% and then 1.54%. This ended up being actually 1.8%, I believe, because we did get a re-entry, right? Oh, no, sorry, not 1.8%, about 3% because we got a re-entry here. Okay, so overall on the day, we're up about 1%. Today was a fine day. I did overtrade a little bit. I will admit that. I probably should not have taken a re-entry here, but my bias was just so, this was probably one of the most perfect long setups I've seen in all of May, definitely. Maybe not April. I had some really nice setups in April. But May, this is definitely the best in terms of bias and draw and liquidity. Not necessarily risk to reward because it's what? 1 to 2. But, that's better than nothing. And money is money in the markets, We continue to be consistent and precise with our entries and exits, okay? So those were the trades for today. This puts us at about, one of the 200K funded accounts is at -1% drawdown. One of them is at about break even, and one of them is at about 2% drawdown. So they're kind of just staggered. This happens because of things like kind of where I place my entries and where I get filled on them, as well as where I end up getting stopped out and how much I get slipped on each one of them is always different. And what else? Sometimes one of the firms will allow leverage up to a certain point and will let me enter a position on a small, like 150 pip stop loss, and the others will not. So I have to limit risk. And so that will also create those discrepancies. But on the live funded account, we were down about 4.5% this morning, went all the way down to -5.5%, and now we are at 3% after this. So we are at 97,000, which is fine. Our next payout is due on Tuesday. I definitely think that with kind of just one good trade, I make 80% of my money in 20% of my days, and today was definitely one of those 80% days, 20% days. So yeah, I have trust in my system. I know that I'm not going to blow the account. I'm confident, I'm not worried at all. And so yeah, our first payout is due on Tuesday. We are going to get a nice hefty payout of whatever we make in the next couple days, and then that will be compounded into more accounts. As soon as we start getting payouts from that 100,000 one-of-one funding account, it means that we can really start scaling our challenges, because right now I'm only risking 1% on the 200K funded, right? The 3 that I have, the 1-of-1 and the 2 funded X fundeds. And as soon as we start getting those payouts and can kind of make money more reliably for this challenge, because I do have a budget for this challenge, then we will be able to start risking 2 to 3% and getting those pass in 1 or 2 trades, right? And then that can really start scaling our capital to that $1 million goal. So yeah, with that being said, that's pretty much everything for today. I really hope you guys found some value, and I did try to be a little bit more kind of precise with the way that I explain things. I definitely admit that I do kind of go into a little bit of jargon from time to time with these trade recaps, but I definitely hope you guys found value, and I will see you guys in the next one tomorrow. See ya.